Good morning, ladies and gentlemen. Today is April 13th. If you're thinking about investing in the stock market, this video is for you. I'm going to go over a few reasons why you haven't, what's stopping you from getting investing in the stock market, and what stopped me from getting invested in the stock market, and why I have been able to create success in the stock market. Whether the stock market is up or the stock market is down, there are still opportunities to make money in the market. And I'm here to show you guys that you don't need a lot of money to make money in the stock market. You just got to respect the percentages gain on your portfolio. For example, here, ladies and gentlemen, my last month, this month, I'm up 7%, up $400. Some may say $400 is not a lot, but I don't look at it as the $400. I look at it as 7%. What I need to do is get more money. That way, my 7% makes more money. And I think a lot of times we come in the game and we come in with a little amount and we want to make a lot, which is no, it's not no shame to you to think like that. But with this strategy, you don't need to think like that. This strategy is for the long term, 5, 10, 15, 20 years. So, ladies and gentlemen, what I've been doing every single day in the stock market ever since last year is buy fractional shares. What a time to be alive to be able to invest in the stock market in today's era. Why? Because you can buy fractional shares. So you don't need to have the whole amount. For example, Bank of America right now per share is $52.49. You don't need to buy the whole share. You could buy $1 worth of the whole share. You could buy $2, $3, whatever fractional amount you want to buy, you can buy it. You can make that purchase. Another reason why you want to get invested in the stock market because there are so many unique ways to protect your money that if it sits in the bank, what's the purpose, right? Like my money sits here, and then if I need to withdraw it, I could withdraw it. And not only that, because I'm on the gold plan, cash that I don't use, that I don't buy, it gets reinvested. So I get a small little cut every month of the cash that I don't use. So it's like, hey, like why aren't you investing in the stock market? Why isn't your money in the broker? So that's that. If you haven't downloaded Robinhood, the link is in the bio. Go ahead and download Robinhood. First thing you want to do is download that. Second thing you're going to do is put money in the account. Third thing you're going to do is research the stocks that you're already invested in, meaning that you're already buying their products or services. And then just buy. Just buy, wait, buy, and wait. Buy dips. Don't be scared that your money is down. Don't be scared that the market is going down. Don't be scared of whatever news you hear. Just keep buying the dips. Just keep being active in the stock market. Just like I'm about to show you guys right here. So if you haven't been watching me, ladies and gentlemen, I highly recommend you stop right now and watch my previous videos. So what I'm going to do today is buy some stocks. I am down on Coca-Cola, so we're going to buy $1 worth of Coca-Cola. I'll buy $1 worth. My goal here, actually, no, we're not gonna buy $1 worth because I forgot, we're like 70 shares in. I got to play for you guys for Coca-Cola, but we're going to do that a little bit later. Let's buy our other stocks that we need to buy today. We're going to buy some Microsoft. The reason why I'm buying Microsoft today is because my average cost, what is average cost? Meaning that the average amount that I normally bought Microsoft is about $390. Right now, Microsoft is worth 376. So that means I've been buying Microsoft at a higher price than what it is. So right now, Microsoft is up, and I usually don't like buying stocks on green days. Why? Because it's up. Why would I buy it when it's up? I want to buy it when it's down. So I'm buying today because even though the stock is up, but it's lower than like what I bought it at, right? What I used to buy it at, right? So it's like, think about it. It's like, let's say your favorite meal, right? Your favorite meal you used to pay $10 for it, and now it's $5 worth. Like now you can buy two of your favorite meal for the price of one, which you used to buy it for, and that is basically what I'm doing now. Like I'm buying more of the share because it's down. Because if I used to spend $1 and it was this price, and I used to spend $2, this, like I need to buy more to get more. So for Microsoft, we're gonna buy $8 worth, even though we're up, but the stock is down. We're gonna bring down our average cost here, probably $1 or two. Brought it down a point. So see what happens when I buy at a lower level. My average cost goes down with it too. So I'm able to. I'm like I don't need the stock to go to the original price of 390. It can go to 389, and I'm breaking even now. So it helps me lower my average cost, meaning that I don't need a higher break even. I could break even at a lower amount. I'm gonna buy some metals. I'm gonna buy some gold because these gold mining companies been breaking even lately, or been at least green. So I want to get out of these companies. To be honest with you, I think my money could be positioned better elsewhere. So I'm soon to get out of these three mining companies. I could sell now. I could sell copper. And I could sell silver. I'm gonna sell copper. But like, why should I sell it though? I feel like we're gonna get another bull run, and then I'm be stupid because I sold. Whatever. I do want to sell. I do want to sell. I think I can definitely get my. Yeah, I'm gonna sell. I'm gonna sell with you guys because I feel like my money could be elsewhere, and I'm actually invested in gold, like the actual metals. So, yeah, I'd rather reposition myself. I'm gonna reposition myself and get other stocks. It was nice holding on to my metals, but I'm holding on to gold in the real life. So, um, and these are mining companies. These aren't even like actual golds itself. So I'm holding on to mining companies. So, um, cool. So we just got rid of that. So that means we gotta add two more other stocks to the portfolio. I'm gonna do my research and we're gonna add two more stocks to the portfolio. Ladies and gentlemen, I want to get into Intel so bad. I feel like Intel's gonna freaking pop. All right, so we're gonna get 50 shares of SoFi, only to balance out the play. We're gonna get 50 shares of SoFi, so I can do two covered calls. 50 shares, boom, and then let's see what's left over for Intel, because I might just jump into Intel. Even though Intel's out, but the freaking run up on Intel's been nasty. Can I get 85 shares? Oh, barely, barely. It's enough. Wow, that's crazy. So let me get 80, get 80 shares, which would be down. I need five more shares. So we just picked up 80 shares of Intel. No worry, I'm gonna go over all the plays. What am I? What am I doing? Why am I buying so much shares? I'm gonna go over that with you guys momentarily here. And we got 100 shares in Hims and Hers. All right, cool, ladies and gentlemen. We might even go green on Hims and Hers. I hope God. God, we go green. All right. So, ladies and gentlemen, I got a couple plays I need to go over with you guys. We have a Coca-Cola covered call. We have a Coca-Cola covered call. First things first. My average cost is 52.15. Coca-Cola is up right now. I sold the 50, but I sold the 50 at $2.49. So 52.49. 52.49 minus 52.15. That is 52. It's like 34, like 34 something. So I'm about to make like $30 on this if Bank of America stays above $50, which is fine. I'll be happy with that. Yes, I can make more. Yes, I'm capping my gains, but in this market conditions, I'd rather, play it soft, make my weekly little income and call it a day. Next one here, we have Coca-Cola. We have Coca-Cola. We got a $35 credit. Our average cost is 77.20. I did the 77.50 for this week. So if Coca-Cola is above 77.50, That's already $30 profit here, and then there's another $30 in credit here. So that's like $60 in credit if I or $6 in profit if I were to sell. If not, I get to keep it, and I have this naked call here just in case if it does run up. We have the call on the backside, which I might get rid of the call because I don't see Big or Coca-Cola running ripping that much. And then we have our SPY put credit spreads. Next one we're gonna go over is SoFi. We're gonna do this in front of you guys right now. SoFi, my average cost 16.95. We're gonna come here to the market chain, 16.95, 16.95. So we 16.95. We could do this one. We can get out with some profits, not a lot of profit. Come on, it's not a lot of profit, but we can get out the position with profit. Get out the position with profit. And then what we're gonna do as well is get one a little bit higher. Or should I get one? Yeah, get one a little bit higher and just eat off that. Just eat off that one. Or I could do both of them. Yeah, we do both of them. Or should I do one higher? Keep a little bit exposure. Keep a little bit exposure. Or should I just buy naked contract at the next week? Contracts are up. All right. We'll probably just, yeah, we do the same thing. We do the same one just so I get a lot of credit in case this does dump. But they're not letting me place it. Fudge. Because I just bought this freaking. Okay. So what do I gotta do? What do I gotta do? What do I gotta do? I just bought him and hers. I just bought some. I can't. I don't want to sell hims and hers. They're not gonna let me. I hate this margin shit. Sorry for my language, but I hate this margin crap, bro. Or I think if I just sell, yeah, we're gonna sell the call down 80 on it. Oh my god, that's brutal. 305. I get 310. Oh, they're screwing me again. This whole margin crap. Whatever. We'll keep the plays alive, I guess. We'll keep the plays alive. I mean, we're not too far off right here from hims and hers coming to break even. If they can rip, that would be lovely. And then do we have the SoFis open too? We have the SoFis open. Oh my god. That's such risk. But how do I was gonna say how do I have $5,000 again? Alright, so we can't do any covered calls because our margin. So what's open at risk right now is these three plays. Is Intel, SoFi, and Hims and Hers. I would love for them to break even. SoFi, Hims and Hers. But right now I am open to a lot of risk right now because I can't cover my plays. I can't cover my plays and this thing could go down fast. So we're just going to chill, see what it does. Hopefully, I don't get margin called. Hopefully, I don't get margin called today. Hopefully, everything rips. Everything's looking lovely. I can't even. Yeah, ladies and gentlemen. So some of the mistakes we're doing in front of you guys, so you can see that hey, I'm human. Don't make perfect options. I don't make the perfect decisions, but even when I don't make the perfect decisions, I still can find my way out of the market. I still can make the situation a lot less worse than what it should have been. So, yes, ladies and gentlemen, I can't. I'm not gonna sell him and hers. That's a loss. Just bought. That'll be pattern. I'll use up a pattern. I should, and then just get back into it, right? Sell. That's what I should do. Burn a trading day. Cause I don't want to. I don't want to be naked in these things, man. I don't want to be naked. I'm gonna sell. I'm gonna sell and get back in. I'm gonna burn a trading day. I'm gonna burn a trading day. No, I need more. I'm gonna burn a trading day. I'm gonna burn a trading day. I'm gonna burn a trading day. That way I could cover my plays now. Now I'm gonna cover my plays. Cause I don't not with hims and hers and SoFi. It feels like Apple or other stocks, yeah, but hims and hers and SoFi, that's crazy work. Okay, so we got the one. We got the one. Hims and hers. 2063. 2063. 2063. Oh wow. I could do the 20 and definitely come out. Definitely come out making some money. Okay. Okay. And then now we get back into Intel. Now we get back into Intel. The 45. Can I get the 55? Oh, look at that. I probably won't be able to do a covered call on it. 64. 64 what? 64 what? 64.32. 64.32. 64.32. Oh, okay. A5. 64.32. 64.32. 32. 32. 32. Did I get it or no? Oh, okay. Wait, did I get it or no? 485. Oh, alright, that's fine. That is super Gucci. I'd rather have Intel free, like no covered call, not hedge that position, and I hedge all my other positions. So that fuck, I should have. That means I should have just hedged. Um, I should have hedged these two first, but whatever. Will they let me if it's out of the money? Oh, okay, even if it's out of the money, they'll. All right, well, ladies and gentlemen, that's the plays that we could do. And this is what I'm saying why you should be invest in the stock market because it's not just buying low, selling high. There are strategies that could help you mitigate risk. There are strategies that you can literally make weekly income. There's so much strategies that you just could do in the stock market. Like if look, just without looking at my stocks, just these stocks alone, just these stocks or these plays alone, I'm making money off of. Besides this call and this credit spread, everything here I'm making money regardless if the stock goes up, down, left, right. I'm gonna be making money on these plays. So Ladies and gentlemen, today's Monday. We have the rest of the week with each other. So thank you guys for watching. If you guys aren't following me on my social medias on TikTok and Instagram, go ahead and follow me at Strictly Financial. Leave a comment down below. What stocks are you guys following? What stocks are you guys watching? We're already past the first quarter, so if you haven't started, get started, ladies and gentlemen.